as well. By the way, numbers of Trent on your screen: 496 crore rupee profit, marginally below the expectations of 519 crores. The revenue figure absolutely in line with expectations at 4656 crores. So it's almost a 34 to 35% growth as the CNBC TV18 poll was anticipating. The net profit, though, marginally lower than expectations for Trent. We'll get you more details on the EBITDA and the margin front as well. But for now, the numbers that we are getting on the revenue and the profit front, they seem to be slightly in line or just lower than expectations. By the way, also there was the stock had run up quite a bit and now it has corrected almost 30% from the highs. Has Trent, there was also concerns regarding the relaunch of Shein by Reliance Retail. That weighed on the stock price earlier in the week, and yesterday Goldman Sachs came out with a note saying that an online-only business model might not be very viable in a country like India, and it maintained its bullish recommendations on Trent, and it had a buy rating price target of over 8,000 rupees. And there you can see the stock slightly recovering from the lows that it fell to. And Mangalam is joining in now with more details on that. Well, how do numbers with prima facie look? Pretty much in line.
Well, numbers are prima facie in line, but they're not, great numbers. Why do I say that? Because last time the company had reported a revenue growth of 39% and the street was working with a revenue growth of 45%. This time around, the street had moderated its expectations. So the street was working with a number of around 35%. The company has gone ahead and reported revenue growth of almost 34 odd percent. So this time it's met expectations, but those expectations were moderated itself after the 35% correction that we've seen in the stock so far. So if you look at the revenue at 4656 crores, largely in line with street expectations of 4680 crores, but the street expectations themselves were muted. EBITDA absolutely in line, 842 crores. The street was working with 840 crores. Margins have come in at around 18.1%. Yes, but largely in line with street expectations. But then again, margins were expected to moderate because revenue growth has been led by Zudio itself. What has the stock done? The stock from the last quarter to now has corrected about 32%, still trading at 81 times. And between the last quarter and now, there have been increased competitive pressures as well. Reliance has launched U-Star. You have Intune coming in from, a Shoppers Stop. You have Aditya Birla Fashion as well as others coming out of their own fashion lines. And then there is a lot of competition coming in from the value fashion retailers, value apparels like Vishal Megamart, V2 Retail, etc. as well. So Trent, good growth coming in. If you look at it, from an industry standpoint, around 34% is much higher than others. But then the stock is priced for that. And secondly, the expectations as against its previous historical revenues have been moderated and the company is reported in-line performance out there. Prakash Diwan joins in now with his first take on the numbers. Prakash, a little over 30% in terms of revenue growth, EBITDA margins at around 18%, net profit growth of 34% versus street expectations of 40%. The stock having corrected, now absolutely flat. What are your thoughts on Trent?
So, I think clearly, all the correction that had to happen has happened. Fortunately for the stock, it went into earnings with very, very muted expectations. The key question now is, and to be honest, I will not be very disturbed with a little bit of that, profit number being off the expectation or the poll, as you said. But 18% margin in this competitive environment is pretty decent. How do they hold on to this 18% zone? Is going to be the key question. You remember, Shein is also making a comeback. Jio is bringing them in, and that's a segment that's kind of getting overcrowded. It has already got crowded. So we'll have to wait for what levers come to their rescue going forward. But yeah, the stock has moderated in terms of valuations. Question is are the valuations comfortable for these set of numbers? Maybe not yet. You'll have to give it a time correction. So I don't expect much of a price correction, but it will probably consolidate till the earnings start giving you some visibility in terms of growth. Particularly the product mix for Trent is going to be important. Zudio is one part, but I'm talking about the other components that also make up for Trent.
Take that point. And just a final word on Trent and valuations itself. When Trent was trading upwards of 110 times, 120 times, the company was reporting EPS growth of 55 to 60% as well, making the PE divided by growth, so the PEG ratio, to about 2. Now the earnings growth have moderated to around 34 times, the company trading at 81 times. So the PEG ratio is more important to watch for Trent as against just the price to earnings ratio. So as the PE multiple comes down, even the revenue growth has come down, keeping the PEG ratio intact at around 2. With that, we'll wrap up on this edition of Halftime Report. You stay tuned. Business Lunch comes up ahead and some more analysis on numbers and perhaps waiting for the State Bank of India numbers as well. Stay with us.